what we've seen is that on a YTD basis, Thyrocare is down 10%. Dr. Lal Path Labs is up almost 22%. So clear, it's evident that money seems to be flowing into one of the diagnostic space. There are two large companies, a lot of unlisted companies, but two large listed companies, Thyrocare and Dr. Lal Path Labs. Now, if you're looking at the key trends and what's happening in the industry, there is heavy discounting by the new players, and that is affecting business for the listed entities and non-listed entities also. Organized players remain the dominant force at this point of time, and shift from unorganized to organized players will be very, very gradual. So it will take time. So this is basically what's happening as far as the industry is concerned. Now, basically, if you're looking at how this industry is set up, 70% is pathology and 30% is imaging. So the high margin business is just 30% at this point of time. Now, if you're looking at how head-to-head comparison between Dr. Lal as well as Thyrocare, Dr. Lal remains the dominant force. You've seen that the sales pretty much on a quarter-on-quarter basis and a year-on-year basis also saw an improvement that came in. That was not the case with Thyrocare. The first quarter was not the best. When Dr. Lal Path Labs managed to increase revenues, Thyrocare actually saw a decline as far as the top line is concerned. So that's one of the primary reasons. Secondly, even if you're looking at the other parameters, the margins, the profits, you can clearly see that the bottom line trend of Dr. Lal Path Labs has been much steeper compared to what we've seen as far as Thyrocare is concerned. And even on a margin trajectory term, if you're looking at it, the trend seems to be in favor of Dr. Lal, because that's seen a move and Thyrocare has seen a drop. Now, the reason why Thyrocare has a margin of 42% and Dr. Lal has 25% is because Dr. Lal calculates his margins on the basis of gross sales, which is a much larger number. So the base is much higher, while Thyrocare does it on net of sales, which means the base is lower. So on a pure EBITDA to EBITDA comparison, Dr. Lal has a higher EBITDA at this point of time. So that's the trend that we've seen at this point of time.
Other than financial, what is setting the companies apart?
Yeah, so we have 6-7 reasons why this happens. First of all is Thyrocare is showing a slowing growth rate as compared to what we've seen as far as Dr. Lal is concerned. If you take a look at the last 3 years and a trailing 12-month basis, you've seen that Thyrocare growth from 32% has come down all the way to 13%. It's come down for 1 year for Dr. Lal, but they managed to increase it slowly and steadily. So the trend certainly seems to be showing that where strength is being there at this point of time. So that's the first reason. Second reason is that the new Calcutta lab will open up for Dr. Lal, and that will give them a huge access to the eastern market. Right now they are dominant player in the northern market, so that's a big trigger, and that is why money seems to be moving in because of increasing market share. Thirdly, Thyrocare is a B2B business, which is typically not the best. Dr. Lal's is a B2C, which is a slightly better business model compared to them. The fourth reason is that, the brand recall of Dr. Lal's is much higher because they have their own labs compared to a Thyrocare, which is more of a B2B outsourcing model. So that's the fourth reason. The fifth reason that we've seen is that the return ratios are much higher for Dr. Lal. You can clearly see that the ROIC as well as ROE, both of them are higher as compared to Thyrocare, both on the same year basis. As far as what's ailing, the strategy basically for Thyrocare has been diversification. They open a business, if it doesn't work, they close it down. So there's no complete strategy. It's a consistent strategy for Dr. Lal, and that's what investors like at this point of time. A few other reasons why there is inconsistent commentary by Thyrocare, very consistent commentary over the past few quarters by Dr. Lal, and that's aiding them. And finally, if you're looking at it in terms of valuations, obviously the Bloomberg consensus target price does indicate that the upside potential for Thyrocare is much higher than Dr. Lal. So valuations working in favor and return ratios working and the returns working in favor of Thyrocare. Even valuation wise, Thyrocare is much cheaper than what we've seen as far as Dr. Lal is concerned. And the Bloomberg consensus estimate also pretty much in terms of analyst recommendation, 7 have a buy recommendation on Thyrocare with just 1 sell. For Dr. Lal, this 11:4. But business wise, Dr. Lal takes it, but valuation wise and the Bloomberg consensus does indicate that there could be potential upside for Thyrocare going ahead.